Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, we've had a couple days off of the sonar, but the VIX has really seen a lot of action the past couple days. The actual cash calculation has not moved much today. It's still 21.15. Today is the last day of December option trading. So with the cash sitting at 21.15, you got to figure the future will be very close to the cash because there's only about 20 hours until the contract expires. So we're at about 21.10 on the future. Now both of those have moved away from the 22.5 strike down towards the 21 as we haven't gotten a lot of movement out of the S&P 500 the past few days. And today there was some even more calming news with Citibank and Wells Fargo paying back the last of their TARP money. We have all of the major banks having paid back the government, another source of stability there and another reason for the VIX to dip down ever so slightly. So sitting at 21, that 21 straddle is in play. It's been trading about 70 cents. So people buying that straddle are looking for a settlement outside of 2030 and 2170. People selling that straddle are hoping for a settlement right here. But most of the trading hasn't even been in December. The big plays we've been seeing are in January and February. We've had a customer very interested in selling the January and February 22.5, 25 call spreads. It's a play on where the futures are. The VIX cash at 21, yet most people expect volatility to move up after the new year with the January future 25, the February future 27. So today we had someone sell that 22.5, 25 call spread and sell the February 25, 27.5 call spread. In both plays, they're looking for volatility to stay around where it is and not move up as is predicted by the future curve. If the VIX doesn't move up, these spreads will expire out of the money and the January and February futures will need to come down if the VIX doesn't move up. So they're looking to play against that elevated futures curve, betting on a lower VIX than is expected, the 25-27 range the futures are implying. This is Jamie Tyrrell with Group 1. Check back tomorrow. We'll have information on December's settlement.
Last thing that we're going to add is Floor the Movie is going to be premiering in Chicago on January 15th of next year. It's a great look at some of the largest traders from the CME and what's happened to them since electronic trading came in. The way we see it, there's been a big turnover of traders down here, and the traders that are on the floor now are not the same type of traders that they were back in the day when open outcry was predominant. Right now, a lot of these traders that are in the pit in the S&P over in the bonds over here, they're hybrid traders. They're trading electronically against the open outcry market and they're making money, and that's all we've got to say for this week.